Shamim, I can see you guys. Alejandro, yes, I can see you. Right, so you guys are posting in the correct place, and I can see you. Right. Now let's begin. So this will be our agenda for today, right? We're going to talk about the ideal market structure when it comes to Fibonacci. There are a lot of different Fibonacci retracement levels, right? So I'll be showing you the few main Fibonacci retracement levels, which I think are the important ones. It's always up for debate, but over the years of using it, I found some to be particularly better than the rest. Yes, Moria, I can see you, right? The negative Fibonacci levels. That means there are those Fibonacci levels from 0 to 100, and there are those that are below 100, and there are those that are above 100, right? So that's where things get a little bit funky, right? But it gets a little bit fun too, all right? Yes, I can see you, Lulian. I can see you. I can see your message. And last one is combining Fibonacci retracements together, right? So, so your host for today, Abdul, I'll try my best, right? Your host for today is me, right? I got a little bit of a haircut, so I look more like my picture now. Right, so share with you a little bit about me, guys, right? So where my little pen again, right? Yeah, so I run the award-winning research firm Everest Fortune Group, right? Everest Fortune Group and also the Forex Army, right? So we're finalists for 2019, 2020, and recently 2021 for Best FX Research and Best Equity Research, right? And at the same time, you know, our team of traders, you know, we're all CFA, CMT, and CFT accredited. Our usual day-to-day is actually advising banks, brokers, and hedge funds on where the markets are heading. But with this special partnership that we have with IC Markets, right, what we're doing is that we are trying to take you guys to the next level of trading. Right, that means to trade like the institutions. I learned from the best. I was privileged enough to learn from the best, right? And I am. And you know, this entire webinar series that we've been doing for the past few months, right, so really take you guys to the next level, right? So you look at this little face here, right? How many of you guys can guess how old I am, right? Don't cheat if you don't cheat if you guys I asked you guys this question before, right? Oh, some say 24, some say 42. Oh goodness, some say most of you guys say 28, 27, 29. I'm glad, you know, it's the Korean skincare, right? It keeps me young, right? Right, yeah, it keeps me young a bit, right? 30, 35, yeah, you know. But yeah, this year I'm actually I'm not 1,356 years old, right? Get there, see some of you guys say 40 years old. I can't help but admit it hurts me a little bit. I'm 40 years old, right? But yeah, I'm 31 years old this year, right? So and 31-year-old, you know, living the life as a trader, right? And it is possible. So you don't need to be some 60-year-old, you know, 60-year-old guy, you know, from Bloomberg that, you know, you see him everywhere, all the different news stations. Then you can be a full-time trader. Right. What I want to let you know is that even as a young guy, you know, you can, you know, you can be a full-time trader if you learn the correct steps. Right. So today we are really going to drill into the correct steps, the correct methodologies, technical analysis that institutional traders use, right? And we're gonna throw away everything that, you know, the kind of nonsense you read, right? And many of you read a lot of nonsense on Instagram. You read a lot of nonsense on Baby Pips, Forex Factory. They have some good stuff, but you need to filter through a lot of it, you know, just to get to it, right? Now if you want to share a link for our friends to come and see, no, you need to sign up through IC Markets. Am I Korean? Okay. How many of you guys can guess which country I'm from? And Nadine, I started when I was 24. Okay, some people say Japan, Singapore, Vietnam, Korean, Singapore. Oh, a lot of people say Singapore, Italy, right? Really, Italy, Taiwan. It might not. Yeah, I'm not sure you can see my webcam, but yeah, I don't really look Italian. Malaysia, Indonesia, Vietnam, Japan, Bulgaria, North Korea. Yeah, you know, have you watched Crash Landing on You? I'm not sure if you guys watch that show. Aussie, Malaysia, right? Yeah, 100% Singapore, guys. Yeah, 100% Singaporean. Okay, if you guys know where Singapore is, right? It's not a tiny part of China, right? Yeah, it's come September, you know, the Grand Prix, the F1 Grand Prix will be held in Singapore, right? So yeah, you know, you can catch, you know, can see us there. Awesome. Can I show it on a map? Well, Singapore is too small that you won't even be able to see it on a map, right? Oh, you're from Singapore too. Awesome. Nice to see some fellow Singaporeans here. But no, I'm not Italian. Right? I've been to Italy for my honeymoon, but I'm not Italian. Right? I love the gelato there. Okay, now let's start begin. Right? Let's start begin. I got you, Petromir. I will get to Fibonacci. Right? Now, the ideal market structure. So when it comes to Fibonacci, right? When it comes to Fibonacci, what is important to look out for first and foremost before anything else is what I call the ideal market structure, right? You don't want to look for stuff like this where there are very big wicks, right? Because the definition of wicks is that there's a lot of indecision. Right, there's a lot of indecision, right? When you see there's wicks, and where there's indecision, your Fibonacci becomes less accurate, right? Because some people might be taking a wick from here, some people might be taking it from here, some people might be taking it from here because different brokers will have different price feeds, right? So this is a very, very messy structure. So if you see stuff like this kind of market structure, they usually don't function that well for Fibonacci retracements. So even before you go into the whole way of drawing Fibonacci correctly, one thing you want to avoid is the unclear market structure. Okay, some people are saying that they can't see my screen and they can only see my face. Can I check? Can you guys see my screen? Yes. Okay. No screen. Yes, you can see. Okay. You should be able to see both the screen, right? If you've been seeing, yeah, you should be able to see. I see a lot of you guys, they can see both the screens. So maybe it's part of your settings, right? So be sure to kind of toggle around because you can see, you are supposed to see both the screen and the video, right? Yes, there's a bar that you can pull up to see both screens. Okay, guys. Now let's begin. Right. So so market structure. What I mean by clear market structure is like this. Right, so this is clear market structure. You can see, where the lows, where the highs, the movements are a lot clearer. And what you notice is that the wicks are not that wild. The wicks are not that crazy, right? So usually this, how you would find clearer time frames, you usually find it in the majors. You will usually find it on the H1 time frame and above, right? And sometimes you will find it on the minors, right? So this is where you usually see clearer market structures. When you see unclear market structures, this is where you usually see the exotic currencies, right? The emerging currencies, right? Emerging currencies, and it could be a major currency, but then you're looking at like the M1 chart or the M5 chart, right? The time frames which are a little bit too small. Okay, so that's the danger. Right, so so naturally, when it comes to Fibonacci retracement, my personal way of doing it is that I try to stay away from the exotic, from the emerging, right? Yeah, from the exotic and emerging currencies. The whiteness of the wick will be affected by the time frame you are at, right? So if we were to, so just to show you an example of this, right? Right? So let's just say we have Aussie cat. Right, so we have Aussie cat. You notice that I guess the wicks are rather small in nature, right? But if we do go down to maybe the 1 minute chart, right, you tend to see a little bit wilder spikes here and there. Maybe even the 5 minute chart. So Aussie cat is still okay actually. Yeah, Aussie cat is still okay. Let's see the 5 minute chart. Yeah, Aussie cat is still relatively okay. But if you compare the 5 minute over the 1 hour, 1 hour is a lot cleaner, as you can see, right? The 5 minutes, you see many candles, like you see over here, it's a little bit wonkier, right? You can see, each candle usually has a little bit of quite a lot of wick, quite wild stuff. You can see it just doesn't look as nice as a 1 hour chart. Right, 1 hour charts are very clean, very nice, right? So when it comes to Fibonacci retracements, right, what you tend to look out for is market structure, right? And we're looking at Aussie cat here, right? If you look at something a little bit more emerging, like dollar ZAR, right? You can see dollars are, even on the 1 hour time frame, right? It looks a little bit funky already, right? And of course, you go down to the 5-minute time frames, you can see it starts to get very, very wild, right? And this is not ideal for Fibonacci retracements, right? You just look at it, you can see that the markets are a little bit, crazy, right? The markets are a little bit crazy. So so yeah, that's the danger with the lower time frames. Look at that over here, right? It's very hard to pick the correct levels to draw Fibonacci retracements from. And this is, of course, the emerging currencies. So what you always want to look out for, in this case, whether it's Aussie CAD, right? Whether it's euro, in this case, euro dollar, you can see the market structure is clear. We're looking here, it's a very clear market structure, and this is prime for Fibonacci retracements, right? And so that's the part I wanted to share with you guys about when it comes to market structure. Stay away. My personal recommendation is that you stay away from the exotic, the emerging, right, the lower time frames, especially when you combine them together. Exotic, emerging, and you combine it with lower time frames, man, it gets very wild there, right? Yeah, it gets pretty wild there. Okay, what is the smallest time frame I tend to look at? Personally, for Fibonacci, the lowest I would actually go is 30 minutes, right? 30 minutes, you still look a little bit okay, right? But I personally, I don't tend to go, damn it, how do I unselect this thing? Yeah, personally, I don't tend to go below 30 minutes when it comes to my style of trading. I usually analyze most of it on the 1 hour and the 4 hour time frames, because that is where technical analysis works well, right? Because if you think about it, right? Where is it? Where do I have, like, on the 1 minute time frame? Damn it. Let me find a proper pen to draw instead. Yeah, on the 1 minute time, on 1 minute and 5 minute time frame, only a couple of people are looking at it, right? But on the 1 hour time frame, you have more people looking at it, right? So as technical analysis would go, the more people who are looking at a chart together, the higher chance it might work out, right? So with Fibonacci, I tend to gravitate towards 1 hour and 30 minute, and my style of trading is day trading and scalping. I'll be showing you guys later how I take some of these trades. It's going to be exciting stuff, right? And my style of trading is scalping. I'm going to show you how you can use Fibonacci retracements for that. Okay. Now, the different Fibonacci retracement levels, right? The different Fibonacci retracement levels, right? So I do want to show you when it comes to Fibonacci retracement. So usually you have your standard 0 to 100%, right? You have your standard 0 to 100%, right? This is 0 all the way to 100. When it comes to Fibonacci retracements, right, all you need to know, right? Let's see. Maybe I have a chart here. I can pull up a chart to show you when it comes to Fibonacci retracements, how a Fibonacci retracement works. Right. Let's have let's have something fresh here. Right. If this is your starting point and this is your ending point, okay. So let's just say this is my starting point, right? This is my starting point, and this is my ending point. Okay, so you usually draw it at the low, right? So depending on how you do it, right? So there's a low, a swing low, a swing high, and usually a swing low here. So what you're doing, all the different numbers, right? So some people are confused. What do the different numbers mean? They're actually very simple, right? So assuming from here, this is 0 and this is 100. Assuming this is 100 pips or 100 units, right? A 23.6 retracement, it means that prices came down 23.6 pips. So a 50% retracement, right? A 50% retracement here means that from 0 to 100, this would be exactly 50 pips. This would be exactly 50 pips. 61.8 means that, it came down 61.8. And of course, it goes all the way to 78. It goes all the way to 88. And if it does a full 100% retracement, right? So in this case, this will be a 100% retracement. It means that, price has came from here and it retraced the entire move down. And that is why you have this thing called the 127 retracement, is where price went beyond the 100% over here. It went beyond the 100%, and it come down to the 127%. Okay, it can go even lower, the 161.8. You know, it can go even lower, the 161.8. And these levels are you know, in terms of pip or percent. So usually for Fibonacci retracements, what you see over here is the percent, right? What you see over here is the percent, right? So in this example, we're using, you know, 100 pips, you know, 100 units, right? Sometimes it's 100 units, sometimes it's 30 units. It's random, but the retracement is a percentage of the entire move from the start to the end. So 127 means that it went beyond, you know, imagine this is your starting point and this is your ending point, right? The whole retracement went beyond the full, you know, 61, 78, 88, 100, and it went beyond that down to 127. So there are times to use 127. There are times to use 161.8. Okay. And there are even times, if you take a look up here, there are times to use negative 27, and there are times to use negative 61.8. There are times to use all these different kind of Fibonacci retracement levels, but you must use them the correct way, because there are so many ways to use them wrongly, right? There are so many ways to use them wrongly. Okay, and today I'll be showing you when to use them so that you give yourself the highest probability chance of calling a reversal. So one of the good things about Fibonacci retracements that people look at is that they are trying to play what I call the reversal, right? So people are looking for the reversal when it hits 23. They're looking for the reversal when it hits 38%. When it reached 50% over here, they're looking for the reversal, right? So imagine if price really went all the way down here and you were buying, you know, you were trying to play the reversal at 23, 38, 50, 61, 76, 88, right? And price keep going down. You're going to be losing a lot of money, right? You're going to be losing a lot of money. So today I'll be sharing with you how you can increase your chances of calling the reversal correctly, right? Either the reversal from here, or if price comes up to here, you're calling for a reversal down. Price comes to here, you're calling for a reversal down, you know, reversal up or reversal up. How do you increase your chance? And this is through this concept called Fibonacci confluence, which I'll be sharing with you a little bit more on later. Okay, for today, I just want to show you that usually the standard Fibonacci retracements are from 0 to 100. Okay, 0 to 100. Assuming this is our starting point and this is our ending point. So our Fibonacci retracement is from here down to here, right? So price to retrace 23%, 38, 50, 61, all the way to 100% and beyond. Okay. Michael, I'll answer the question later. Okay. Different from key level, right? So let me explain a little bit more. Each of the Fibonacci retracement levels are strong. None of the Fibonacci retracement level is stronger than the other, right? That is the important thing which I want you to wrap your this important concept that you need to grasp. Just because 61.8 might be, some people might say 61.8 is a golden ratio, that does not mean it's stronger than the rest. How you need to understand Fibonacci retracement is that every single level is the same. Every single level is the same, right? The important thing to take note of is that when the levels are combined, that's where it becomes stronger. And that is what we want to look for today. We want to find out how we can use different kind of Fibonacci ratios to get Fibonacci confluence. Okay. Yeah, let's see. Okay, so let's practice drawing Fibonacci retracements. Okay, let's practice drawing Fibonacci retracements. Oh, sorry. Let's practice drawing Fibonacci retracement. I'll show you how to draw a couple of Fibonacci retracements, okay? So in this case over here, right, I would always go from a big high all the way down to a big low. See, if the market continues to go lower, I will need to bring it down slightly lower. Okay? I'll always start from a high to a low. So when you start from a high to a low, what you're essentially looking out for is you're trying to see, assuming that the market actually bounced from here, You're trying to wait for the market to go to the 23, or maybe to the 38, or maybe to the 50. You know, you're just seeing how far up the market can reverse before a retracement. Okay, so what you need to look out for, right? What you need to look out for are what I call significant levels. Okay, so in this case, you know, you can see this. This is what I call a clear market structure. Okay, so if I were to draw a Fibonacci retracement from here down to here, would you guys say, is this correct or is this wrong? If this is my starting point over here, is this correct or this is wrong? So I get a lot of people saying that it is wrong, right? And it's wrong because yeah, you need to look for a high. So the key definition here is, what do you deem as a high? Do you deem this as a high, or do you deem this as a high? Which would be the correct high, A or B? Or C over here? This is a high. A or B or C? Some people say it's even D. A lot of people are saying A, a lot of people are saying B. It actually depends on your time frame. Exactly. Rasavan answered very well, because if you turn to H4 chart, this looks like one move down, right? But if you're on a H1 chart, this move down is not so clear, right? I would consider this one move down, one move up, and one move down. Okay, so the key thing about Fibonacci retracement, right? So I'm going to do an example for you. Let's see if I can find an example. Let me try to find a pretty good example for you guys. Okay. Give me a second while I'm just kind of looking at the markets live now, and okay. So you see, is this a good Fibonacci retracement? If you start from this low here to this high here, right? So if you start from a low here to the high here, is this a good Fibonacci retracement? Yes or no? If you say no, why? I've seen a lot of answers. There's so many different reasons. So, okay, but none of the reasons actually say this. If you look at this, right? Price is up, it's down, and it's up. So if you look very closely, right? I'm going to zoom in here. Sorry. I'm going to zoom in here. So if you look very closely, when you draw, yeah, enjoy my Kit Kat. Thank you very much. I'm getting hungry, man. Right. So if you draw a Fibonacci retracement, right? If you draw a Fibonacci retracement, there's this thing called a trend line. Can you see? Where you turn off and you can turn on this trend line, right? I'm using TradingView, right? So the thing about a trend line is that this line, a lot of people don't pay attention to this trend line. But the truth about a trend line is that the closer price is to the trend line, the better it is, right? Because right now, when price is up, down, up, there is all this space. Can you see? There's all this space between price. There's all this space between price and the trend line, right? And the more space there is, the less effective it is, right? There's all these gaps over here, right? However, so you can see this is the first example. This is the first example, right? Where there's a lot of space in between. Let's just say we go to, we find a very, very clear market structure. Actually, there are quite a lot of them. I'm just being very picky. Okay. being so picky. But there's quite a few good examples here. But yeah, so in this case over here, you see if I do a Fibonacci retracement from here all the way up to here, you notice that, yeah, price doesn't deviate too far from our Fibonacci retracement. And that's the important thing, right? The further price deviates from the trend line, this little dotted line, the less effective it is. So when you're drawing a Fibonacci retracement, always pay attention to the trend line. Okay, over here there are a few good examples, right? So this is a good Fibonacci retracement from here to here. Price doesn't deviate too far, right? But if I draw a Fibonacci retracement, you know, previously, previously we were saying whether it's A or B, right? But if we draw a Fibonacci retracement from here all the way down to here, you notice, right? You notice, and I'm gonna just change the color of. How do I change the color of this though? Right. Anyway, right? You see that there's a very big price deviation. Yeah, here it is. Right. I'm going to change it to maybe green. Right. You can see there's a very big price deviation in the middle. Very big price deviation. Right. So this part here and this part here causes the Fibonacci to be weaker. Right. This causes the Fibonacci to be weaker. On an extreme example, right? On an extreme example, would you say if you think that trend lines are not so important, right? So some of you guys are saying you don't see why trend lines are that important to Fibonacci retracements. Okay, on an extreme example, does this look like a nice Fibonacci retracement? Right? Guys, does this look like a nice Fibonacci retracement? No, it doesn't. Because see how far price actually deviates from the trend line. Right? The further price deviates, and that's a problem with many people who are drawing Fibonacci retracements. Right? They just look at it as like, oh, I'll just take a low and a high. Right? So I'll just take this recent high over here and draw a retracement down to here. It's like, yeah, that is a high and a low, right? Technically this is one big high, this is one big low, this is one big high, this is one big low, right? So, if you see it that way, you consider it that way, you don't factor in that there is such a big gap over here, right? There's such a, there's such a big gap over here. And this means that the structure of the market doesn't agree, right? Doesn't agree with the way you're drawing Fibonacci. Right? Yes, you can draw it. Yes, you'll be able to find Fibonacci retracement levels. You can see that we found Fibonacci retracement levels here, but is it going to be effective? Right? Is it going to be effective? Right? So that is the key question. Right? So it's not about finding the setup. There are many ways to draw Fibonacci retracement that can give you many different setups. It's about finding the effective setups, the correct setups that are going to make you money. Right? So one way to do that is to stick to the rules. Stick to the rules of drawing Fibonacci retracement correctly, and a lot of that comes down to this little thing that many people don't seem to use, which is the trend line. This little trend line over here, right? Many people don't seem to notice it, but it is there for a reason, right? It's there for a reason. It's there for a reason. So usually a trend line, right? We got questions coming in. It's like, how short would we draw the trend line, right? Usually I would as short as it gets, right? So in this case, right, I would consider. Let me just zoom in a bit, right? In this case, I would consider, from here to here. Now the important thing is to not consider it in terms of time or week, right? So some people say, when it comes to drawing trend lines, from your starting to your ending point, how long should it be, right? It's not how long it should be, because it differs, right? So if you think about it from here to here, right? Let's take a date range from here to here. It's 5 days and 16 hours. It seems like a long time, right? But then, on the 4-hour chart, this is just a tiny part. Right, on a 4-hour chart, this is so this is just very tiny, right? On a 4 hours, maybe you take one from here to here, right? The date range. Where's date range? Yeah, date range from here all the way up to here. This is 63 days, right? So So this, this looks like a lot because you're using the 4-hour chart, right? But if you use the 1 week chart, you can't even see it, right? It's so tiny over here, right? And even this one smaller, it's even less than that, right? So you don't exactly use date range when it comes to how far to draw a trend line, right? Rather, you look at what the market is telling you, right? So in this case, this is valid, this is valid, this is valid, this is valid, this is valid. Now, I'm going to ask you a few questions. So the best way to is through practice, right? Is this right? Do you think this is a valid swing high, swing low, swing high, swing low, swing high, swing low? Is this valid? Over here, swing high, swing low, swing high, swing low, swing high, swing low. I got people say yes, no. Craig saying no. Yes, no. Not really, yes. So the problem with this is that it's a little bit too small, right? It's a little bit too small, right? A rule of thumb that I personally have is that it needs to be at least 30 bars big. All right, it's not a hard and fast rule, but I require the what I mean by I require the this part leading up to the swing high. So if this is a swing high, what is leading up to it needs to be at least 30 bars to the left and 30 bars to the right. In this case, it's just this is just a small little up and down. It's not going to be very effective, right? It's not going to be effective, right? You're looking for the it's a little bit subjective, but you're looking for the significant movements like this, right? These are the clear market structures that you want to take Fibonacci retracements from, right? And when you take that, and when you take this from these kind of levels, your retracement will be slightly better, right? So what I mean by that is that sometimes if you can just measure from here to here, right, 46 bars, that's effective, right? But if you have this small little thing here, this is only 17 bars. Right, so it's not much of a swing low in itself, right? From here to here, just let me clear everything, right? From this little so-called swing high to this swing low, it's only 7 bars. So it's not going to be a very effective. You want to look for at least 30 bars to the left, 30 bars to the right, right? In this case, you got about 30 bars here, 30 bars. Nice little drop here. From here all the way to here, right? You got 144 bars, right? So that is kind of what you want to look out for. You want to look for, it doesn't matter which time frame, as long as you don't go too small time frame. So 30-minute, 1 hour time frame, it should be fine. So you can use the zigzag indicator. So some people, a very good question, right, is that there's a famous zigzag indicator. Zigzag. Yeah, there's a famous zigzag indicator, which is partially I don't have it here, man. So maybe over here. Yeah, zigzag indicator. It can be useful and it cannot be useful. Like for example, in this example, right, these zigzags are not useful, right? So you need to adjust your settings so that the zigzag becomes useful. Okay, right? So that's the tricky part when it comes to using zigzag indicator. It is usually not that effective, right? It can show you the key that like this is correct, this level up here is correct. Down here, I would say it's more or less correct, but these little movements up are not really correct either, right? So zigzag indicator is good for guidance, but I wouldn't use it when it comes to using it to map out every single Fibonacci level. Okay. Yes, we have a recorded version of this. IC Markets webinars, webinar page. You will be able to find it as per all the past webinar recordings. But anyway, without we haven't really been deviating, but yeah, I've been explaining to you guys the importance of Fibonacci. Okay, now I'm going to show you how to get negative Fibonacci retracements and how to get positive above 100% Fibonacci retracements, right? So first, the negative Fibonacci level. This is some of the secret sauce. It's one of my favorite Fibonacci levels, but it is very, very tough to get it correct. Okay, to get the negative 27 level, guys, right? to get the negative 27 Fibonacci level, what you need to do is you need to draw a Fibonacci retracement from the starting point, to the ending point. Okay, so once you have the start to the end, you need your Fibonacci retracement to at least retrace up anywhere above 50%. 50% all the way to 88%. Okay, you might want to take down these notes here. 58 to 88% is the magic level. Once it retraces nicely, right, to any of these levels, and it makes a push down, that is where, you know, it can make a push to the negative 27 level. When it reaches that level, as you can see, you know, the starting point was here, and ending point was over here. It came all the way up to the 61.8 retracement, and it made a very nice move down to the negative 27. So it tends to retrace very nicely to the 0%. A lot of people don't know how to draw this properly. That's why they're not able to really take advantage of it. But to me, it's one of the strongest, right? It's one of the strongest ways to draw Fibonacci and find out just by itself, you know, the setups are sometimes wonderful, right? But it's how you draw it correctly. So I'm going to show you an example now. Right, I'm going to show you in an example. So let's go through examples together. And this is what I mean by scalping setups. I use this mainly for scalping, right? So maybe from here to here. So in a normal person, so a normal person, when they look at this, they might think that this didn't make any money, right? But I can tell you that this setup made a lot of money for me, right? What do I mean by that? Okay, so let's just how to use the bar replay feature, right? Bar replay feature, right? And come up to here. I'm going to add in something. I'm going to add in the 0%. I'm going to add in the 1.0. Okay. So you can see over here, this is our starting point. This is our ending point. Price came all the way down nicely, and it bounced up all the way to the 50%. Remember, we say at least 50% to 88%. This is the sweet spot we're going for, right? This is the sweet spot we're going for. So once it comes from 0 to 88%, so in this case, it hit, a 50%, and it starts to go down further, right? It starts to go down further, and it goes beyond the 0%. What we're looking out for next is the negative 27%. You're looking for price to come down here, and for me, as a scalper, I'm just looking for price to bounce a little bit, whether at negative 27 or whether at negative 61.8. I'm just waiting for price to come down and bounce a bit, right? These are the key things that we're looking out for. Okay, now so let's see how it kind of work itself out. Okay, you can see price slowly going down. There you go. And you can see once it reached that level here, you can see price tends to slow down at the level. If you're a scalper like me, you're playing just 5 pips. 5 pips means, right, if your entry is over here, so your entry is at 1.1921, and maybe you play to 10 pips to here. This is how a scalper plays. You know, they're only looking for a small little bounce, right? And when a small little bounce happens, right, that means within the 1 bar over here, right? If you zoom in over here, within this 1 bar over here, we have hit the take profit already. Okay, but I can just show you as it progresses further, how price just bounce up a bit more. So this has made us our money. So we're talking about scalping, right? Yeah, so I'm using the H1 chart to do scalping, right? So a lot of you guys want to know my trading strategy. Yes, I use the H1, I use the M30 just to get into a scalping setup over here. It is, and I'm going to show you what happens as it reaches the negative 61, right? And it comes down, blah, 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 it comes down further. And it comes down here, down to negative 61. And you see, same thing, it bounces up. you don't need to call. Yeah, that will be a quick buy trade, right? You don't need to call the move, right? You don't need to call the move that is going to bounce here and go all the way up to here to make money, right? If my stop loss is, if my entry, let me just show you if I have the long position, right? You can see that if my take profit is, I'm going to need to zoom into the 30-minute charts maybe. You can see if my take profit is just 10 pips over here, and my stop loss is also 10 pips, right? You notice that my risk to reward ratio is 1.03. I'm not sure you can see this thing here, it's 1.03, right? That means the concept that you guys need to understand here is that I can have a stop loss of 100 pips, and I can have a take profit of 100 pips. My risk to reward ratio is also 1. So it's not only about how much money you make. You can have if your take profit is 200, right? But your stop loss is 100. You have a risk reward of 2, right? You have a risk to reward of 2. But if you're able to call such an accurate bounce that your stop loss is only 20 pips, you have a risk to reward of 9.63. That means if you put in $1 or you put in $100, you get $963. Okay, so it's about it's not only about your entry, it's about your stop loss, and it's about your take profit. Okay, so anyway, to see this one, I just use this thing called long position on TradingView, right? Just to see my take profit. Okay. Now, so that's the important thing here, right? So if my entry is just here, I'm playing this small bounce, that's all you need to do, see? Is made you enough money, even though it might ultimately go against you, right? In this case, price did bounce up quite nicely, right? How did it bounce up? It was because of the negative 61.8. By itself, it is already good, right? By itself, the negative 61 and a negative 27% retracements are already very strong levels to use. If you combine it with other Fibonacci retracements, it becomes even stronger. Let's see actually if I combine it with here. Yeah, there you go. Okay, so now I'm going to show you. So I have quickly showed you how to use the negative 27 and the negative 61.8 retracement. I'm going to show you really quickly how to use the 127 and the 161.8. So what time frame do I use to scalp? I use the H1 time frame. Okay. So Andy is asking if I wait for a bounce or do I just put a pending order? I put a pending order straight away, right? So the thing about Fibonacci retracements is that it is a leading indicator. It is one of the few leading indicators out there, meaning that it can forecast where price will go to before retracing. That's the key thing about Fibonacci retracement. It's one of the key leading indicators out there. It's not like moving average where it's lagging. It's not like a MACD where it's lagging. It's one of the leading indicators out there. Be concerned, you will hit back down. Camilla, I think what you're referring to are pivot points, yes, but none of them are as leading as a Fibonacci retracement and a Fibonacci extension. Okay, yeah, none of them are as leading as a Fibonacci retracement or as leading as a Fibonacci extension. Okay, now what I do want to share with you is that how we can get Fibonacci levels above 100%, right? I'll be showing you this really quickly. For Fibonacci levels above 100%, this is your starting point. It goes down to your ending point here, and it comes all the way up. So this is what I call the Nike tick. Just do it, right? This is what you're looking for when you are looking for when you're trying to get the 161.8 retracement or the 127% retracement. You're looking for the Nike tick. Okay, you're looking for a very clear movement down and then a very clear movement up, because once it reaches these key levels, that is where it retraces very nicely. Okay. Now we go into some of the trade management later where I can answer these questions for you guys. But this is what I want to show you when you're trying to look for 161.8 or 127% retracement, is that you're looking for a very clear movement down and a very clear movement up. Why I say a very clear movement down and a very clear movement up is because of this, right? Let me find an example for you guys. Let me find an example for you guys. So the same thing here, you draw a retracement from down to here, right? So this, right, this part here is a so-called clear Nike tick. Movement down to movement up is very nice. 127% retracement, it reverse, right? What is not clear is if you draw if you draw this as a Nike tick, right? Because there's a lot of space over here, there's a lot of space over here. That's why it will not be as effective, right? So remember, when you're looking for that kind of retracements, 127 and 161.8 retracements, let me just come back here. What you're looking for is the Nike tick. Let's see if we can any Nike ticks around here, right? So this, I guess, would have been a very nice Nike tick, right? This would have been relatively okay because it came down here and came up again, right? This would have been a nice Nike tick down here up to here, right? And sometimes you can see how price touches the 161.8 and it reverses very nicely. It's a little bit scary, but yeah, you will see it pretty often. It won't happen all the time, right? But it happens enough times to to really help you see the effectiveness of this kind of Fibonacci retracements. Okay, I think this is probably a 127 from here up to here. You can see 127 retracement, it touch here and reverse, right? Yes, there'll be time hopefully to ask some questions. Now, the important thing I want you to know here is that trading with a single Fibonacci retracement level won't be effective. Okay, it won't be effective. What you want to do is to combine multiple Fibonacci retracement levels together. That is where it gets effective, right? So if I were looking at the current chart over here, right? If I was looking at the current chart over here, the first thing I do, right, I would do a Fibonacci retracement from top down to here. Okay, -27, -61.8. That's great. I do a Fibonacci retracement from here. This is the V I'm looking for, right? Maybe this is the V I'm looking for. Right, I'm looking for a V shape here, like a reverse Nike tick all the way down to here, right? So this is a reverse Nike tick. I can notice that there's this level here, and there's this level here. So these two levels combine here to give me that small little bounce I need to play play a move. In the future, we will combine this thing called a Fibonacci extension. Let me see if I can see a Fibonacci extension. I'm not sure you can see it, but a 78.6 retracement also lined up over here. So that to me is a very good level to play a bounce from, right? So when you're looking for trading, when it comes to trading, what you want to do is this, combining Fibonacci retracements. If of course over here in the next chapter, in the next round, we will combine Fibonacci retracement and extensions, right? If you really want to reach the next level of trading, right, you need to master this, right? And this is coming from a guy who spent years learning it, right? I'm trying my best. This is honestly an advanced topic which we're jumping to. If you master it, it'll be great for you. I know from the questions that are coming through, I can tell a lot of people are really confused. Maybe we have another session that cover a little bit more on it to recap a bit, but you need to master this, right? This, if you ask me, is the secret sauce. All the support and resistance, all the price action, only when you combine only when you combine it with Fibonacci retracement does it become super effective. Okay, yeah, I can tell that you guys are a little bit okay. I'll try my best, but what I want to let you know is that it's all about combining multiple Fibonacci retracements. Look at this, right? I have a starting point, I have an ending point. Each color refers to one, okay? I have a starting point here and I have an ending point here. I notice that we have a 50% retracement here. I have another retracement from here to here, a smaller one. I have a 241% retracement here. I have another one from here to here, and I have a 127% retracement. All of them line up at this level over here. So that is what we call Fibonacci confluence, right? So what I would usually do, we expect price to come down here, right? And because of Fibonacci confluence, we expect it to bounce up very nicely, right? And true enough, you can see that, price came down, touched this level, and bounce up. So you can combine this with, you can throw in your price action over here. You can throw in your support and resistance. You can throw in the different kind of technical analysis. But just by having these 3 Fibonacci levels over here, you give yourself a very high chance of calling a successful reversal, right? So the 3 Fib levels, yeah. So when it comes to scalping, you don't just scalp 5 pips or 10 pips. You need to look at the time frame you're trading. I need to look at the time frame which you're trading, along with how tight a stop loss you want to keep. Okay, so so this is the concept behind it, right? Maybe I haven't. I'll spend some time to go through the questions because we actually have a Q&A session right now, right? We have actually a Q&A session, and I'm seeing so many questions come through. So let's just take this time to run through Fibonacci retracements together. Okay, so when it comes to if you're a scalper, right? If you want to use Fibonacci retracements for scalping, right? Usually your stop loss and take profit is very, very tight, right? Talking about 5 pips, we're talking about 10 pips stop loss and take profit. Usually I have it at a different extreme, meaning that if my, for example, if I'm doing an analysis on here and I was really scalping euro dollar, let me see. I would draw all these different Fibonacci levels over here. And I noticed that, okay, right, I actually have a very nice area over here. This will be where I'm buying from. I'll buy anywhere from here. What I do notice is that maybe there is a 88% level over here. So my stop loss, would maybe be just slightly lower than here. So that is one way you determine your stop loss, right? You can use commodities. You can you can do this for gold. You can do this for Bitcoin. It's particularly effective on Bitcoin, right? But yeah, these are some ways that you can scalp, right? But one thing you always must do is to look out for multiple Fibonacci levels to line up together. Minimum 2, right? But I would prefer 3, right? Let me just try to look out for some. If you guys got some markets, you want to throw at me to take a look at, I can try to look at it straight away for you guys. Pound dollar, right? Let's do a pound dollar, look at gold later. So pound dollar, when I look at the 1 hour chart, it's slightly messy, right? It's honestly slightly messy, right? But what I would consider, no, pound dollar hardly anything. Retracement from the top down to here. Retracement from the top down to here. Price actually reacted off the 50% retracement. Maybe an extension from here, right? Yeah, there was a confluence area here, but there isn't much to look at pound dollar, right? Or gold. Gold is not clear. The market, I don't like the market structure, right? You can see for gold, the market structure over here. At one glance, I'm looking at it and I know that it's not going to be good for any Fibonacci retracement. I can draw a Fibonacci retracement from here to here, right? I can draw a Fibonacci retracement from here to here, right? Because I know it's all very messy. So at one glance on gold, I know that I can look at it, right? So we can look at euro pound maybe, euro pound, right? If I were to do an analysis on this, I click here, I will draw from top down to here. Okay, I noticed that 23% retracement has been broken, right? 23%. If price comes all the way up from here, nope, there isn't anything. Fibonacci extension from here up to here, down to here. Okay, I see 2 levels lining up very nicely here. right? So this could be a potential level where I could sell from. The Fibonacci extension is is like the Fibonacci retracement, but 2 times more complicated. Okay, guys, right? But yeah, just looking at this here, and actually CAD yen, Euro pound has a very nice level. I'm looking at over here, very nice level. 50% retracement, 61.8% extension, right? So you're looking at an extension of looking at the extension that's very nice. You know, looking at this zigzag, this extension, by looking at a retracement from here down to here. Right, very nice. Okay, guys, a lot of questions on extensions and retracements, a little bit confusing, right? A retracement, right? So a Fibonacci retracement usually only takes 2 points, 1 point here and 1 point here. It only has a starting point and an ending point, right? A Fibonacci extension has the first point, the second point, and then the third point. It has 3 points, right? So it's slightly more complex. I feel like, you know, it takes a while to learn this. It takes a lot of practice, right? So what I will be doing is I'll be suggesting to IC markets maybe maybe we need more training sessions together. Yeah, yeah. Yes. Okay. So you know, I'm going to run a poll now, right? I'm going to run a poll. Let's see. I'm going to launch this. Can you all just vote for me? If we had one more, if we added one more session each time, how many of you guys would prefer a live trading session where we kind of go through the markets together and practice what we learn? And how many of you guys would prefer educational session? Just to get a gauge, right? So if you guys really want educational live trading session, right? Okay, Vincent, I'm glad that you can follow my demonstration today. Okay, ideally we need to pick one now. So just pick between live trading and education session, right? My top 3 to 5 in-depth books on Fibonacci, right? I actually don't have one. I have an article on Fibonacci, right? You just need to search on how to draw. Later, I'll show you guys how to draw Fibonacci retracement, right? And you'll find the Forex Army there, right? Okay. A good thing is 87% of you guys voted for a live trading session, right? So I'm going to close off this poll, right? Now I'm going to run one more poll, which is if we had a live trading session on Monday and an education session on Wednesday, are you able to attend both? Right. So guys, you're able to attend both. Now's the time to vote for it, right? And this will more or less help us have a gauge with IC markets to increase the kind of webinar sessions that we're having, right? And I know that whether I can join, you know, instead of seeing you guys every 2 weeks, I can see you guys more often and try to guide you through the markets together, right? Do I use other indicators alongside Fib levels, price action, support and resistance, and oscillators, right? So yeah, you know, okay, I can send this to you guys because I realize a few people are asking for it. Yeah. How to draw a Fibonacci retracement correctly. Yeah, you can take a look at it. Right? Okay, I'm glad you like it, Carl. Right? I'm glad you like it, Carl. Okay. Okay. Okay, your responses are very important, right? So we know, okay, 91% of you guys will be able to attend both, right? Okay, so I'm just gonna show you. I sent the link through on chat. This is how to draw a Fibonacci retracement correctly. I actually tried to create a tutorial on how to draw Fibonacci retracements previously. I hope it helps, right? I hope it helps you guys to kind of go through a written version of it. So yeah, if you want to take a look at it, you know, you can go through it there, right? It is quite useful, right? You will also find the kind of trade managers I use there and stuff. But yeah, this will cover more on the Fibonacci retracements, how to use it, right? The website I'm just gonna send it to you guys, send to all, right? That is the website, right? You also see some of the tools that I use there, And also for you guys who are asking me from the previous session, the particular trade manager I use, you can also find it there, right? So the trade manager I use, for example, if I draw a Fibonacci retracement from the top down to here, right, and I notice that this is a level I want to sell from, I'll click sell. I'll put my entry over here. My stop loss, maybe I can put it slightly above. Take profit, I'll put it maybe down here. I can adjust my partial profits, my break even, all of that, I can put it by the side. And I want to risk 1% of my trade, 1% of my account. I can put it here, it's very straightforward, right? So this is the trade manager I use, right, to manage my trades, for some of you guys who are asking. If you want to take a look at that, it's very simple. I'm just going to paste the link in here, right? If you guys want to take a look at it, right? John says that, yeah, I'm glad you find it useful, right? I send it in the link to you guys, right? If you want to take a look at how to get a trade manager, you can use that. It's not endorsed by IC Markets. It's something I create myself. So yeah, if you're interested, just take a look at it. No, it's for MT4, right? No, it will not work for C Trader. It only works for MT4. Okay, guys. Wow. Wow. Almost 90% of you guys are still hanging around. Awesome. Okay, awesome sauce. So we've now is the part where you guys can just hammer me with questions, right? We hammer me with questions and I do my best to answer them. So what indicators I use, right? I actually show it to you over here. I use support and resistance, Fibonacci, RSI. I actually have a stochastic, right? But I don't know if I have it over here. I don't have a true RSI over here. I only have the true stochastic, right? So what they it's a secret method which I don't which we learned previously. Yeah. So this is one of the indicators that we built, right? I might as well show it to you guys over here. So what the true stochastic actually does, right, is that I'm just going to show you. Since some of you guys are asking what I use, right? The true stochastic, it finds where the bounce happened, I need to change the color. Just let me change my pen color to maybe yellow, right? It shows you where the bounce happened previously, and it scans the stochastic to see where the bounce was. So in the past 5 big bounces, in the 5 big bounces that happened previously, 1, 2, 3, 4, 5, what we notice, right? This is one bounce over here. This is a second bounce over here. Third bounce, fourth bounce, fifth bounce. On all 5 bounces, stochastic was actually at this level. Stochastic was at 2.6%, if you can see it over here. So that is the hidden level of stochastic, right? So yeah, this is one of the ways I so some people say stochastic is at 20%, right? 20%, 80%, right? Some say 70-30, but this indicator actually helps you scan for the hidden level of stochastic, right? So yeah, this is one of the other things I use when it comes to calling the reversals quite well, right? I use the candlestick patterns indicator, which you guys heard about, and I also use the trade manager, right? But let's stick to Fibonacci. No, it's not on TradingView, right? No, I don't really trade that much crypto. I scalp Bitcoin, but I don't hold it long term, right? Paul, what do you mean that the links are not opening? Are the links able to be open for you guys? The ones that I sent across? Awesome. Awesome. Right. Okay, both open correctly. Right. So I got a lot of questions coming through. So usually I don't usually, yeah, you need to open announcements, then you can find it, guys. Right. Hey, thanks. Thanks, guys. Thanks, Vincent. Right. So do I wait for confirmation candle? I don't wait for a confirmation candle. When it comes to scalping, you get in before everyone and you get out before everyone. Right? That's the key thing about scalping. Get in before everyone and get out before everyone. Don't just don't wait for everyone to kind of jump in and stuff. You want to get out as soon as possible, right? So it's weird that the link don't open, right? Are you waiting for a how do I set a doing this well? Indicators don't usually work well in a volatile environment, right? So I usually look for clearer market structures like this, right? Honestly, what I really want to do with you guys, right, is to maybe in the next session, I might tweak the session to be to expand a little bit more on Fibonacci retracements. Okay, it is supposed to do Fibonacci extensions, but now, but maybe I will change it to be going through Fibonacci retracements more in depth, right? So I got questions coming through saying that the links cannot be opened, right? Can you share me what kind of error are you guys seeing when you say that the links cannot be opened? Try to refresh, right? It might work. Right. Oh, yeah, links open for how do you decide when you have an endpoint to know if you use indicators and they show continue? Okay, it opens for me. Yeah, Google it. Yeah, sometimes you can just Google it and you can get it. Oh, so many questions. Yeah, just copy and paste the link. Open them for announcements. Just click the link. Okay, someone's asking for Fib retracements on gold. I honestly think gold is a little bit hard to do now, right? So if it's not clear enough, I tend to go on a higher time frame. So when I want to draw a Fibonacci retracement, right? You want to draw a Fibonacci retracement on gold, right? Because of this structure here, it's not very good, right? If I draw a retracement from here to here, there's this zigzag kind of movement that makes it not so effective, right? So the Fibonacci retracement for gold is not really strong right now, right? I would consider the Nike tick, the reverse Nike tick from here. From here to here. I would consider the reverse Nike tick, right? So remember the Nike tick, but now in reverse mode. You're waiting for it to come down to here, right? The 127% retracement also coincides with a big swing low from here. Okay, so that to me is good, right? This level suddenly is a very strong level, right? There's a nice 127% retracement. There's a nice swing low support, right? And I think maybe there might be a Fibonacci retracement. I'm not sure. Oh no, the 61.8 retracement is slightly lower. Right? Yeah, the 61.8 retracement is slightly lower. So I would highlight, if I would look for a Fibonacci retracement, I would highlight this area as a support area. Right? I'll highlight this area as a support area to look at. Maybe I might draw a big retracement from here and see if there's anything. Nope, there's nothing. Right? Yeah. So if you ask me about gold, this is kind of what I look at. No, if your brother is 15 years old, he can learn, but I think the legal age to trade forex might be 18. Swing traders are not necessarily more profitable than scalpers, but you need to pay attention to different things. Like swing traders, you need to pay attention to news, to the economics of the country, right? Especially news events which are released. Those are things that you need to pay a little bit more attention to. For scalping, you usually don't need to pay that much attention to, what is the 5-year plan, 1-year plan, 5-year plan of a country, right? If you have a lot of questions, so if you want to if you have blown up a couple of your accounts and you still want to trade, right? If you blow up a couple of accounts and you still want to trade, what I recommend is you start smaller, because if you can do it with $100 account, you can do it with $1,000 account, and then you can do it with a $10,000 account. You don't need to start with a $10,000 account each time to blow up, right? You can do it with $100 first, because once you can do it $100, to go from 100 to 1,000, you just increase your lot size. 1,000 to 10,000, you just increase your lot size. But first, you must be able to do it with $100 first. If you cannot swim in a baby pool, you won't be able to swim in an adult pool, and you won't be able to swim in the Olympics, right? So that's the same thing, right? When you come to trading, you must be able to do it in the baby pool first. Swim in the baby pool. Once you got a hang of it, then you start going to to the deeper end, right? Right. So best areas or time frames for drawing Fibonacci, right? Usually for Fibonacci, anything above 30 minutes is good to draw Fibonacci, right? And if you follow my my lesson earlier, what you want to look out for is clear market structure. Make sure when you're drawing a retracement, you know, when you draw a retracement, make sure that it follows your trend line very closely, right? It follows your trend line very closely. You don't want retracements like I'm I'm losing my voice, man. You don't want retracements that just that just cut through prices, you know, like this. You know, you don't want retracements that just cut through prices. Where is my... Yeah, you don't want retracement that just cut through prices over here, you know, cut through prices over here. You know, look at this. This is not a good retracement. Okay. So when I scalp, I usually hold the trade for at most 1 hour, right? Is the trend line on the Fibonacci effective when price is below and above it? What do you mean by that? When is the best time to enter after putting in Fibonacci? Right, the best time to enter after putting in Fibonacci is when multiple Fibonaccis line up together, right? So if I was looking at let's just say I was looking at euro yen, right? How I would analyze this, right? How I would analyze this is first I would do a Fibonacci retracement from here down to here and to here. Okay, so we might have a nice setup over here, right? So we have one from here up, comes down to at least a 50%, and it's coming up to it's coming up to the negative 27% or the negative 61.8%. Okay, now if I do another Fibonacci retracement from here down to here, very clear movement down here, right? You can see it's a very clear movement from the start all the way down to here. What we notice is that there's an 88% retracement that lines up very nicely with the negative 27% retracement. 2 levels there. This is already a potentially good trade to use, right? Then we have the Nike retracement, right? Let's see if it gets us anywhere. No, the Nike retracement only gets us these levels over here. Kind of wish it got us better levels. Then we got the Fibonacci extension from here up to here, down to here. Right, we find a few levels, nothing that fantastic. Okay, now we do although I don't really like it, I'll do one last retracement from the top all the way down. Interestingly, from the top all the way down, we have a 61.8 retracement that lines up with the 88% retracement that lines up with a negative 27% retracement. So what I'm going to do is I'm going to highlight this as a big area of resistance. Right, so if I were to sell from here, my stop loss would be above this key level 161.8. I'll put it slightly above over here, right? And where will I take my put my take profit? I would usually play it the recent 23%, so I might play it down to here. So what I'm effectively just looking out for, I'm waiting for price to come up to here and drop down to here. Right, so this is one of the trades that we can keep an eye on together, right? Euro yen, right? So, yeah, how do you add the minus levels in trading view, right? Sorry, how to add the minus levels in trading view? Right, you can just add in negative there, negative 0.618, negative 0.27. Right, and you will automatically get the negative levels. So what you're looking for are confluence levels, and this is my bread and butter on how I make my money. Right, you just put in the confluence levels, and it's very easy to trade. Okay. Yeah, more or less. You know, you need to do many kind of retracement. Yeah. Yeah. It's the Ichimoku, not the Ichikawa indicator. They go quite well. Yes. Okay, guys. Next session we'll go through this again more in depth. So go sign up for the next session. Go to IC Markets. Yeah, go to IC Markets webinars. Right. So go to IC Markets. Sign up for the next webinar session. I will do a Fibonacci retracement round 2 to kind of go through everyone too. I can nail this home before I try to teach you guys Fibonacci extensions. Because if I teach you guys Fibonacci extensions now, I think everyone will go crazy, right? This is a very advanced topic, right? It's a very advanced topic. It's one of the strongest tools to use, right? And regarding the live education session, I will send the feedback to IC Markets, and hopefully I understand that we might be having a Fibonacci live trading session in the future, right? Ideally, maybe once every week, even, right? Along with a live trading room for you guys to tune into, so that I can guide you guys to trade better, right? Yeah. So today is a little bit advanced. I'll do my best to introduce the second session, right? But I need to know if you guys like today's content. So I'm gonna launch this. I'm going to launch this poll for you. If this is the kind of content that you like, please help me vote from 1 to 5, so I know what kind of content you guys are looking for. Are you looking for more basic kind of content? Or are you looking for more advanced? If you like the advanced one, just vote. Vote 5, and I can give it a 10. Awesome. So I know what kind of content that you guys like, and I can I'll try better to prepare more of this kind of stuff for you guys, right? I can see. Oh, again, we got more than 76% of you guys who voted 5. Thank you. We got one of you guys who vote 1. I'm very sad, right? Yeah, I need more Kit Kat as well. Man, I swear, man, I need a sugar rush or something, right? I need a sugar rush, right? Okay, awesome stuff. Thank you very much, guys. Yeah, I do need a YouTube channel, right? I'll get IC Markets to at least put more of this stuff up on their website, right? I'm based in Singapore, right? I'm based in Singapore, Sunny Island, Singapore. Yeah, more bread and butter stuff. I'll do my best for you guys, right? Yeah, more bread and butter. That's how I create. I'm glad you all learned a lot, actually. Yeah, I do trade the USD SGD, actually. So okay, I'm gonna close off the polls. Thank you for voting very much, guys. We got 73% at Actually, we got 96% of you guys who voted 4 and 5. So it's very nice. So for Fibonacci retracement, right? So for the standard MT4 Fibonacci retracement, if you want to increase it, you want to change the Fibonacci levels, right? Once you draw a Fibonacci retracement, you right-click on it and click on Fibo properties. Right, under Fibo properties is where you can add in different Fibonacci levels. You can see I added in a 78.6, negative 0.27, negative 0.618, and this is where you can add in more Fibonacci levels, right? Because the standard one, I think they don't have the 78.6 and the other levels, right? So yeah, this is how you edit. Just right-click and click Fibo properties, right? So yeah. So guys, if you guys want to catch up a little bit more with me, right? A place that you can go to, right? You can find me very easily on a Comfy Desmond, I guess. Yeah, I just send you this link, right? Yeah, I just send you this link. Right. So yeah, if you guys want to catch up with me, you can add me on Instagram. It's a chill account. Most of the time you kind of see my cat, right? You kind of see my cat over there, right? I post most of my cats most of the times, right? Yeah, so you can find me over there, right? Go follow my cat. It's a really cute cat. Right. So yeah, if you want to find me, yeah, it's I have a very chill channel on Instagram. Go find me there. Okay. Now, yes, my cat gives trading advice, right? So usually I put 2 buttons in front of it, buy or sell. So sometimes you smash the buy or smash the sell button, right? And that has 100% accuracy, right? So wait for me to do that, okay? Okay. So Vincent, I'll take a look at I'll take a look at the email you sent through, right? Yeah, it's my lucky cat. Awesome stuff, guys. Awesome stuff. Right. So I will see you guys in 2 weeks, hopefully. Right. Yeah, hopefully, I'll speak to IC Markets. Maybe we can start doing webinars every week moving forward. At least I can guide you guys a little bit more. Right. And I can do some live trading sessions with you guys where I can answer your questions, we can practice together and can trade together. Okay. Is awesome stuff. Yeah. So if you want to get the recorded version of the webinars, right, I'm just going to show you how to get it again. icmarkets.com. Go to more, right? Under more, you want to go to webinar. When you click on webinar, right, you will be able to see all the past webinars we did, right? So the most recent one is understanding trade management, right? Then we have price action, support resistance, forex. So you can go through the basics over here. I'm the guy who kind of did the webinars too, right? And after that, you can see the upcoming webinars that we'll be doing. Okay. Yeah, live sessions will be awesome, guys. I'll try to introduce that in. Okay. Now, thank you so much. You guys actually stayed for a full 1.5 hours, right? Instead of the full 1 hour, right? So I'll catch you guys on the next round, right? Maybe whiskey the next time round, right? Today is really long and tiring, so I'm just gonna take a break now. I'm gonna just drink my, eat my Kit Kat and drink my water. yeah, brainwash. Thank you so much, guys. You take care. Peace out and trade safe. All right, guys. Adios. Bye bye.